Hi guys, I'm Trader Marion and today I have a confession to make. So I have to admit that 2 years ago I was conducting technical analysis all wrong and I couldn't understand why I was earning less than other traders. So where did they get all these cool cars and expensive apartments? I was looking for the problem in strategies, but it turned out that it was all about the basics, about technical analysis, and today you'll learn my life hacks, which helped me earn tens of times more. Hit likes on this video because the information might be complex for the first time and you might need to rewatch it. Okay, let's get started. The third thing I did wrong was identifying support and resistance levels. So why do we even need this? To enter the profitable trades with minimal risk? So look, here's the support level on the chart. We see that the price often bounces off of it and it means the upward trend is very strong. If we enter a trend in this case, there's a 90% chance that we will make a profit. The difficulty lies in the correctly identifying the level and otherwise will reveal a false trend and place a losing trade. We can identify support and resistance level in three ways. The first is somewhat prehistoric but maximally accurate. Here we see the price movement on the candlestick charts. Now we need to draw two parallel lines around the price movement. So identify a significant trend on the chart. For an ascending trend, draw a line through a lower point, support, and the parallel line through the upper point's resistance. For a descending trend, it's the opposite. So the resistance lines go through the peaks and the support lines go through the bottoms. Now we have a clear boundaries within which we will place trades with almost 100% profit. Yes, that was possible. When the trading within the channel, the goal is to place a trade to buy at the lower boundary support and the trade to sell at the upper boundary resistance. If the price breaks through the channel boundary and secures beyond that, this might signal possible trend change. And we can even know almost exactly when the price will reverse with the help of Fibonacci retracements. This tool I long ignored because not many traders pay attention to it, to be honest. So through it, just like the red light on the traffic signal saying, "Stop! You're about to lose money if you place a trade now." So what's brilliant about it? This tool is based on the Fibonacci sequence and is used to determine potential support and resistance levels during a trend change. So levels such as like 13.2% or like 50 or 61.8 like show the price reversal after its movement upwards or downwards. So and here you don't need to calculate or draw anything because like Fibonacci levels are already embedded in many platforms for traders. I'll show this using TradingView as an example. On the TradingView platform, you can use the Fib retracement tool or other similar tool that reference the Fibonacci sequence for automatically constructing Fibonacci levels. Here's how to do it step by step. Open the chart of an asset you are interested in. Start by selecting the asset for which you want to construct Fibonacci levels. In my case, it will be currency pair, for example, American dollar and Japanese yen. So here we are. So next, select the Fibonacci tool on the toolbar at the left. There is an icon labeled Fib retracement or Fibonacci tools or something similar depending on your interface. Okay, so let's go. Click on it and select Fib retracement right over here. The names can vary like slightly depending on the version of the platform. To construct Fibonacci levels on the chart, let me leave for a sec for like Fibonacci tool. I will leave it like that, and to construct Fibonacci levels on the chart, so find a significant low and high for an ascending trend, or high and low for a descending trend, of course, and let it be right over here. Yeah, think just here, yeah, and right over here. That's it. Click on the Fibonacci tool and then click on the chart at the start of the trend, and without releasing the mouse button, drag the cursor to the end point of the trend, and I think we will go like that, and it will be like that. We'll just widen it a little bit to touch the highest firstly, and then I will drag it to the lowest. Okay, like this and like this. Here we are. So release the mouse button and the Fibonacci levels will automatically be displayed on your chart. Well done! So after constructing, analyze the Fibonacci levels. They will help identify potential support and resistance levels, as well as possible trend reversal points. But besides Fibonacci levels, like the basic analysis of candlestick patterns, will help us place the right trend. So yes, you can mess up here too. So 2 years ago I never traded volumes, and that's what nearly guarantees us a successful trade. So what's this trend of volumes? So look, here's a engulfing pattern. So you might think that's it, the trend is changing, but here's where the volume indicator comes into play. For example, OBV. So, and we see that the pattern is actually weak, the price isn't likely to move upwards, so therefore watch the volumes when key candlestick patterns appear. So high volumes can confirm the strength of the movement, while low volumes may indicate its potential weakness. So the most understandable volume indicators are OBV or VPA. So now a trading life hack that hasn't been written about anywhere. Don't just watch the volumes, but compare them. If you notice a sharp increase in a volume on a pattern, then its significance has increased significantly. So such confirmers are especially needed by beginner traders or those who are not achieving the desired income. But very often we see what we want to see instead of the real situation in the market. And this is called pattern reinterpretation. It happened to me all the time, so such a pattern illusion. And when you're like a cheater, ready to chase after your money and don't notice that the patterns you have spotted aren't that significant. But I have a slow acting remedy against this. So like study the commonly occurring candle patterns, including bullish and bearish engulfing, doji, hammer, and star. Practicing on real charts helps in better recognizing them, and before making conclusions based on a pattern, always assess the overall trend and technical indicators. Does the pattern confirm the general market picture? Also, keep a trading journal. Record the algorithm of successful trades. This will allow you to compare the current situation with what you have already tried. And of course, subscribe to my channel. Over several years of trading, I've tried everything and share with you every successful strategy, money, life hacks, and market strategies. So, how about we go hunting for profitable trades? I'll see you on the channel, and bye for now.